Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager for GDM. Today's outlook, we start with the Bank of Japan. It kept its massive monetary policy stimulus intact earlier in the Asian session, as widely expected by the investors of course, but the analysts are still calling for further action in the upcoming months on the back of tumble in the consumer inflation rate. The BOJ voted 8-1 to maintain its pledge of increasing base monetary at an annual pace of 8 trillion yen via purchases of government bonds and riskier assets. The focus now shifts to BOJ Governor Kuruda that will hold a media briefing later in the day to explain the policy decision. However, in the European area, the European equities finished higher on Monday as investor sentiment continued to be buoyed by the extra liquidity provided by the European Central Bank in the region. The pan-European EUROZone 600 index saw a gain of 0.9% and closed higher at a provisional 400.34 points. Now, the German DAX hit a new all-record high with a rise of 2.2% and smashed through the 12,000 point level. The majority of sectors in European bourses closed higher, with autos, financial services and chemical companies leading the rally. Aggressive policy by the ECB continues to lift stocks in the region, which have outperformed their US counterparts so far this year. The euro has also weakened significantly, helping exports, although the single currency was trading higher against the greenback in Monday's session, ahead of the CPI and employment change later in the session today. In the commodity sector, we're looking at gold price. It hovered close to its lowest in over 3 months today as traders waited for the first weekly Federal Reserve monetary policy meeting to gauge the timing of US rate hike. However, the expectations that the Fed would begin increasing interest rates as soon as June on the back of a stronger economy have helped the dollar. Precious metals, however, are hurting from the strength of the greenback, which is trading at the near 12-year high against the basket of major currencies. Now, the Fed begins its two-day policy meeting today, which the markets are awaiting clues on the timing of any move by the US Central Bank. Higher rates could dent demand for assets, as we know, such as the bullion and that don't pay any interest. A stronger greenback hurts gold's safe haven appeal, while also making it more expensive for holders of other currencies. West Texas Intermediate crude was at $43.41 a barrel, down 47 cents and slightly above 6-year low of 42.85 marked on Monday. While the U.S. rig count dropped to 1125 last week from 1809 rigs a year ago, past cycles have shown there is often a lag between when drilling stops and when oil supply stops growing. We expect West Texas Intermediate to remain under pressure as investors swell further as the seasonal maintaining period begins. We expect this to remain the case in the short term. However, traders are now awaiting the data on U.S. crude inventories for price direction. And for the calendar today, we're expecting at 10 European Consumer Price Index, employment change, and ZEW survey of the economic sentiment. All of that with high volatility expectations. So advice to all traders and investors, keep a close eye on the calendar and be prepared for big price movements. Thank you for being with us. See you next time. Bye-bye.